Time for another tax tip this Tuesday. Joining us is Scott Curley with Finish Line Tax Solutions. And you've mentioned before about small businesses. So why do small businesses typically, they can get in trouble with the IRS and maybe hear that A word no one wants to hear, an audit? Why does it happen for small businesses?
Well, that's a tough one for small businesses. And when the IRS chooses to investigate or audit a company's financials to determine if they are fulfilling their tax obligations, then they can look into 1 year or a number of years. The reason that many small businesses find themselves in these situations, especially since we have been trying to get through this COVID crisis, is because it's been tough to keep the doors open for many small businesses. And a lot of business owners have to make tough decisions. There's something referred to as payroll taxes. And what many small businesses have to do is, of course, by law, a small business owner has to pull the payroll taxes from their employees' income and remit those funds to the IRS. It stays in a trust fund until that's done. Now, the challenge is that when things are tough and bills have to be paid and lights have to be kept on, then the business owner has to make a decision. Do I send these monies to the Internal Revenue Service, or do I keep my lights on? And in many cases, that's a real question that they have to ask. And the unfortunate thing is that that's not the small business owners or the business's money to keep. However, if they don't make that tough decision or keep those at times to keep the lights on, they may go out of business. So it's a very, very tough situation that small businesses have found themselves in, especially over these past few years.
Yeah, I was about to say, just so much to think about for them. So my question is, can an audit create more tax problems if a business isn't properly represented?
Yeah, I kind of deviated from the question, but I'll get back to it by trying to answer it from this point. Can an audit create more tax problems? The short answer is yes. And the reason for that is because once an agent gets involved and starts examining records, then they can examine multiple years. And so if there is something that has been discovered for, say, 2021, then it may trigger an audit for 2020 and 19 and 18 and so forth. The IRS has 10 years that they can go back. So I never, ever recommend for a business who is in the midst of an audit or has been informed that they have to meet with an IRS representative for an examination to go it alone. They should contact us or a company like us who knows the rules and the guidelines and the procedures as intimately as the IRS does, so that we can hold the IRS accountable to their own rules. If you go at it yourself, the revenue officer is going to assume that you know the rules and the guidelines and the procedures just as intimately as they do. And in most cases, that doesn't work out well for business.
Awesome, Scott. With Finish Line Tax Solutions, thank you so much for that tax tip on this Tuesday.
And thank you for having me.